Hello, and welcome to AI Market News by LM. Today, we're diving into what's been a pretty wild week in the markets, where a powerful risk-on mood has really taken hold. Let's break it all down. It's been a real roller coaster. Between all the geopolitical headlines and the drama with the central banks, it felt like the markets were on edge pretty much the whole time. But now, as the dust is settling, we're seeing this surprisingly optimistic vibe emerge. It's a clear risk-on rally, which basically means investors are feeling confident enough to jump back into assets like stocks. So what's behind this sudden change of heart? All right, our first stop is the US stock market. It ended the week with a really impressive, wide-ranging rally. Let's take a look at what the numbers are telling us. Looking at the major indexes, we're seeing solid green across the board. But the key thing here isn't just that the numbers are up, it's how broad this rally is. From the huge industrial companies in the Dow to the big tech names in the NASDAQ, that optimism was everywhere. This tells us it's probably a real shift in sentiment, not just one little corner of the market getting hot. So what's lighting this fire? Well, it looks like a potent mix of three things. First off, the economic data we've gotten has been stronger than a lot of people expected, suggesting the US economy is holding up really well. Second, some of those geopolitical worries that were spooking everyone earlier have started to calm down, which lowers the overall feeling of risk. And finally, the American consumer just keeps on spending, which is a fantastic bedrock for growth. Now, this risk-on mood isn't just showing up in stocks. Oh no, it's making huge waves in currencies and commodities too. And the key to understanding all these ripple effects, it all comes down to the US dollar. Here we've got two really important currency pairs. On one side, we see the euro getting stronger against the dollar. On the other, the dollar-yen pair, which is always a great barometer for how investors are feeling globally. But you know what? They're both telling us the exact same story. The US dollar has been taking a real beating this week. And that brings us to the big headline in the currency world this week: major weakness in the US dollar. In fact, the dollar is heading for its worst week in months. Now, this isn't just some abstract currency story. A weaker dollar can have a big knock-on effect. It can boost other assets like, you guessed it, gold. See, gold is priced in dollars. So when the dollar gets weaker, it becomes cheaper for investors holding other currencies to buy gold. This has helped spark a massive rally, pushing gold ever closer to that huge psychological milestone of $5,000 an ounce. Okay, so we've covered the what happened across the board. Now, let's try to decode the why. What's actually behind this sudden burst of investor optimism? Let's dig a little deeper into that very question. A great tool for this is the Fear and Greed Index. Think of it like a mood ring for the market. And no surprise here, after this week's rally, the needle has swung decisively away from fear and is pointing much more towards greed, or what we'd call investor confidence. Now, another huge piece of this puzzle comes from the Federal Reserve. This chart's interesting because it shows that as all that strong economic data rolled in, traders actually lowered their bets on the Fed cutting interest rates anytime soon. Now, that might sound backward, but the market is actually taking it as great news. The thinking is that the economy is strong enough to stand on its own 2 feet without needing the Fed to come in and save the day. And that is a very bullish signal. So that gets us caught up to today. But the markets, they never stop moving, do they? So let's look ahead and see what key data points could be driving the story next week. Taking a peek at the economic calendar over on investing.com, 3 reports really jump out. We're going to get crucial PMI data from both the US and the Eurozone. That's basically a survey that gives us a real-time pulse check on the economy. And then we've got the Michigan Consumer Sentiment Report, which tells us how confident and, more importantly, how willing to spend American consumers are. These are going to be some major tests for this rally. So the week is ending on a real high. But this story is definitely not over. The big question we're left with is this: will next week's data pour more fuel on this fire, or will it throw a wet blanket on things and bring back the uncertainty? We will all be watching very, very closely. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.